Hey everyone, welcome back to your weekly market outlook. This is for the 18th of November 2024. Let's get started with a quick recap of last week. I think the main focus was definitely the inflation numbers from the United States, and data comes in as per consensus. We do see an increase in inflation rate back up to 2.6%. This is already priced in by the market there, and also the core inflation remains flat at 3.3%. Again, we do then have comments coming up from Jay Powell, the Fed chairman there, that they are not in a rush to cut interest rates. So I think this is probably in response to Trump victory as well, and the potential for the Trump's fiscal policies to potentially increase inflation again with the tariffs and the tax cut. It does seem to be more of a stimulus, and that could actually jumpstart inflation up again. And I think that would be some of the considerations that the Fed has placed. And also, if we take a look at the latest CPI numbers from the US, we do see a little bit of an increase as well in terms of the inflation number. So in terms of the upcoming rate cut in December, I think we are looking at a little bit of a shift here, with traders now considering that there is actually a higher chance of a potential no cut in the month of December there. Other than that, we do see the retail sales number above consensus, and also the previous month was actually revised up to 0.8%. So we are looking at a pretty strong US economy here. UK GDP numbers, if we take a look at the UK GDP numbers, it does comes in as per consensus. The year-on-year number is now at 1%. The quarterly numbers are a little bit of a mix here. We do see a little bit of an increase below consensus to just 0.1%. So that's data from last week. And for this week, we're looking at the RBA meeting minutes to be released on Tuesday. We're also going to be looking at the inflation rate in the UK. And again, we are looking at a little bit of a pickup in terms of inflation there. Consensus is now pointing to an increase from 1.7% to 2.2%. We're also going to be anticipating a retail sales number from the UK on Friday, as well as the inflation rate in Japan. Other than that, we actually don't have much to look at in terms of the fundamental drivers in the week. So we're going to be focusing a lot more on the technicals for this week. All right. Let's just jump straight into the Aussie USD here. And again, with the Aussie USD, we do anticipate that stronger US dollar, as we mentioned from last week's outlook, that everyone is going to be looking at a potential anticipation that the inflation there is going to increase. And we do see the data come in as per consensus, and you can see that push there with the US dollar continuing to get stronger here. And right now, this is currently pushing the Aussie USD below 65 cents. With that in mind, the current support that we have here, and this is where last week finds a little bit of a floor there on Thursday and Friday, it is at about 64.50. Now, this would likely just be a temporary support. We're looking at further push to the downside for the Aussie USD here. We're looking for that move towards 64 cents before we actually find a much stronger support. Now, if you take a look at the 64 cents number, that's obviously the April low, and also where the August bounce was for the Aussie USD. So we are looking at 64 cents as a much more significant support level to watch out for. Right now, in terms of where this is currently progressing, we're not looking at any changes in terms of trend direction. I think there's still room left for us to see the Aussie USD being pressured towards 64 cents. Now, next, that's the Euro USD. With the Euro USD, again, we were anticipating for that push lower here. We were looking at support around 1.05 to 1.0550, and that's basically encompassing. If we take a look at what this level is, this was basically exactly a year ago. So we're looking at November to December support on the Euro USD, and we're now back to last year's price. So whatever gain the euro has made in the year, that has basically been wiped out. We're now back to that level there. Again, this is not really a surprise with that red sweep coming up from Trump's victory, Republican control of the House and Senate here. We were looking at that move towards 1.05 as a little bit of a minimum push, right? And we have seen that push to 1.05. We saw a little bit of a bounce there for the year USD. But right now, this is going to be critical for this week, whether or not price is actually able to bounce off 1.05. Ideally, we do want to see a little bit of a correction happening here. We want to see a little bit of a bounce from 1.05. We do want to see a retest of 1.06 or 1.07 as as a resistance there, and we want to see that healthy correction there. Otherwise, it's going to be really tough taking positions into the euro USD. We still have further anticipation for towards the end of the year here. We might actually see that break below 1.05, but yeah, 2025 projections, a lot of analysts are talking about back to parity, and some are even pushing lower than parity there, about 95 cents on the euro USD. So we'll see what happens here. But yeah, right now we are at that area there. We are at that critical area there from last year where we actually saw a little bit of a bounce there. Our price might slip down a little bit below 1.05. We do have that low around October 2023 there. That's closer to about 1.0450 level there. So yeah, about 50 pips below 1.05. We might see price dip down a little bit there. But if we don't see that push below 1.0450, we're still looking for that potential bounce for a little bit of a correction on the euro USD. Otherwise, if we lose that 1.0450, then I think it's going to be a quick fall for the rest of the year, back closer to 1.03, 1.0250 on the euro USD. Now with the pound USD, we're looking at 1.25 and 1.2550 last week as a potential for where or how far the pound USD can go. And obviously, if we take a look at what this level is, again, very similar to what we saw on the euro USD. This was basically the order block that was kind of established at the end of the year last year, and also at the second half, at the middle of 2024 there. So we're looking at 1.25 and 1.2550 as potentially providing support for the pound USD. Again, ideally, we do want to see a little bit of a bounce here happening from 1.2550, 1.25 once price has reached that level there. We do want to see a little bit of a profit taking. We do want to see a little bit of a correction, a technical correction for the pound USD, because right now, if you take a look at the extensions that I have left on the chart there, price is currently beyond 161.8%. In fact, price is actually at about 200% in terms of extension there. It is overextended. We do prefer to see a little bit of a pullback happening on pound USD. Otherwise, it's actually going to be really hard to position ourselves here to go in with the trend there. But yeah, should it break 1.25, then obviously the next stop would be the support that we have around April for 2024. That's going to be back about 1.23 to 1.2350 on the pound USD. All right, lastly we have the dollar Japanese yen. We can see the dollar Japanese yen. It sounds encouraging that it actually breaks 155. Now, can we consider this to be a break above 155? This is actually very hard to argue right now at this point in time. We do see some verbal jawboning in terms of how excessive the move is on the dollar Japanese yen by the Japanese government, that they are looking at verbal intervention at this point in time, just kind of scaring the market here. But we also see a little bit of a profit taking as price approaches 157. And that was actually a very sharp pullback on the Friday's close here on the dollar Japanese yen. Now, if we consider that sharp pullback on the dollar Japanese yen, we might actually see a little bit of a deeper correction again on the dollar Japanese yen. Should price not be able to maintain the position back up above 155 this week, then we are actually looking for price to track lower, closer to 152, 152.50, where we actually have that support from about 2 weeks ago on the dollar Japanese yen. But that's the current situation on dollar Japanese yen. It's very risky at this point in time. There is that political instability going on in Japan right now, so we're not quite sure whether or not the currency intervention could happen. But I think market is also pricing in for a December hike from the Bank of Japan. So that's kind of putting a little bit of a lead on how far the dollar Japanese yen can progress. It does kind of scare the market a little bit in terms of whether or not they should actually be holding a position for the long run. But again, from a technical perspective, we don't actually have a weekly close above 155. That from that point of view, and also looking at the daily rejection there on Friday, we saw that push back lower below 155. If the trend continues in the next 2 days, then yeah, price could actually retrace a little bit lower towards 152. But we are watching 152 very closely here because for the dollar-Japanese yen to have that momentum to continue and break above 155 again, it has to find buyers at 152. If we don't see buyers at 152, price could track lower towards 150, and that might be a much deeper pullback on the dollar-Japanese yen. We could actually lose a lot of momentum here on the dollar-Japanese yen. Yeah, but the current situation here is that it's ideal to just wait for that confirmation whether or not we're actually going to see a much deeper pullback in 152 or 150 on the dollar-Japanese yen, or we push back up above 155. If we manage to push back up above 155, then I think it's safe to say that bulls are still probably going to take this up to 158 or 160 in the next coming weeks on the dollar-Japanese yen. So with that, good luck to your trades for this week, and I'll see you soon.